What's up, guys? My name is Michael. How's it going? And this is Danny, and we're Team OpenVest.
So OpenVest is a decentralized investment platform based on simple thesis-driven rules. So our goal is to remove managing partners as well as managing fees using Tezos.
So OpenVest works in 5 easy steps. First, you gather a syndicate of your friends. Then you pool funds together. Then you set rules based on a collective thesis that you agree to. Based on those rules and on that thesis, OpenVest will auto-invest those funds, and then you can adjust rules accordingly based on the outcomes of your investments. Some example rules for a venture capital fund, for example, might be deal flow, investment size, valuation maximum, the growth rate of a startup, and for a public-focused fund, example rules might include the sector, the beta, gamma, etc.
So we decided to use Tezos for this because of the liquid proof-of-stake protocol, so that enables seamless thesis adjustment. So basically what this means is that if the investors of this particular fund want to change some way that they're investing, then there's a consensus-based mechanism that allows them to do that seamlessly. Tezos also enables reliable performance tracking, which as well as data validation. So this is going to enable syndicates to fundraise future rounds more easily because they have a proven track record that they can reference. And in terms of our governance, so the syndicate members are going to collectively agree on the investment criteria, but not the investment decisions. Those investment decisions are sort of managed by a smart contract, which in turn is informed by the investment criteria. And then amendments that are made to the investment criteria or the smart contract are going to take in the form of voting, and shares are distributed versus via a proof-of-stake model. So the more money you have invested, the more say you have in whether those amendments pass or not.
So let's walk through one example with venture capital. OpenVest is beneficial for venture capital because unlike a traditional venture capital firm, humans do not make decisions. Humans decide on criteria, and then OpenVest automatically makes investment decisions based on that criteria and that thesis. Because everything is purely thesis-driven, investments there's less bias in investment decisions. There's no management fees, and everything is extremely transparent with improved deal flow and risk mitigation. And for startups, OpenVest is phenomenal because OpenVest funds have crystal clear guidelines, providing better access to capital and near instant funding decisions.
Another use case is in active investment portfolios. So basically, OpenVest allows you to codify specialized knowledge into investment criteria. So currently a huge issue in a lot of investment firms is that the decision strategy or of how the funds are being used are made by portfolio managers who often don't necessarily have the specialized knowledge. So basically what this allows us to do is to codify specialized knowledge, and then when there are market events or movements in the global market, then we can automatically analyze and accurately react to those movements and tailor the reactions that we have based off of the specialized knowledge and the investment criteria that has been set forth.
We have a pretty straightforward revenue model. Instead of charging the typical 2 and 20 that most investment management or venture capital firms charge, we charge a flat 1% maintenance fee for all funds on the platform. Our goal is to reach $1 billion in assets under management within the next few years. And for adoption, we're planning to launch syndicates with high-profile investors. Imagine being able to invest in a syndicate with Elon Musk and deciding on investment criteria with him about energy, for example.
So in terms of our social impact, about 20% of all the fees that we collect will go to supporting our own OpenVest syndicate, which is focused on funding underrepresented founders. In the future, we're going to look forward to licensing OpenVest for free to nonprofits, which would allow them to help with their own decision-making processes. And in terms of how this builds the stack, so this basically establishes Tezos as a key decision-making platform, as well as the blockchain. And so the integration of Tezos also can be used as an investment vehicle, so especially for cryptocurrency ETFs or any other sort of financial instruments, Tezos can be used as sort of the primary investment vehicle for companies or for individuals to make those investments. And then there's also the potential for AI and machine learning layers to be built on top of OpenVest and Tezos as well, because as I mentioned before, in terms of like pulling the quantitative data from the news that's being analyzed, you will need to have natural language processing systems, and that can only be done basically through AI. So that enables sort of that layer to be added on as well.
We believe people should invest in theses, not people. Thanks so much.
Hi everyone, my name is Ivan. I am the founder and CEO of Spoten. This is Danilo. He's my co-founder. He couldn't be here today. He's sick, but he was able to join and contribute virtually. And we are Spoten. Danilo, pode passar. Spoten is a two-sided platform that connects small businesses with their consumers. Pode passar. So today, what happens in a transaction between a small businesses and their consumers is there's exchange of a product and a means of payment. And for the business, there are no actionable insights, like they lack of a tool to capture the user data. And for the user, we might have a lot of several apps, like if you go to Starbucks, you have the Starbucks loyalty program. If you go to an airline company, you probably have the airline company. So you have a lot of apps, or maybe the business is so small that they don't have any. With Spoten, we're going to be able to integrate in our platform not only data, but also Tezos to provide a standardized loyalty program for the end user and meaningful insights for the businesses. So it's a two-sided platform. Danilo, próximo. In Spoten, it's all about going beyond. Próximo. So how do you build this stack in here? It all starts with the Tezos blockchain technology. With the Tezos blockchain technology, we're able to create smart contracts, and the goal of blockchain in our company is also to put an extra layer of data privacy for our users. We collect business transactions all in one app, and then we apply machine learning for our business users to predict what's going to happen even before they predict. So for example, it's Saturday, it's raining or snowing outside, and I have all the data about the weather, about the day of the month, if it's a day that the users have disposable income or not, and I cross that along with our own platform and the data that is in there to generate the insights for the business before they even happen. So like I'm able to predict using our model that the business is going to have X amount of users, and using the average amount that they spend in the business, how profitable it's going to be that day. So if it's snowing out there, I can proactively advise and make the business push a button and send a coupon for everyone that is 1 mile away from your business. And that's all clusterized and all using machine learning. So in the end of the day, it's not me as a consultant saying, but my algorithm saying that that should happen before. Danilo, pass. I don't know what's happening with the presentation, but I'll keep going. So you have the slide deck. So we are a fintech company. And you might say like, okay, you have a lot of fintech competition. And yes, we do. But while in the States there are competitions, there is still only 25% of the end users using the cell phone to pay. While in Asia, this number is at least twice as ours. What is different about Spoten? Spoten goes beyond. So for the end user, it's all your loyalty apps in one single app. So you don't have to be downloading several different choices, and it's all plug and play. And for the small businesses, it's all about the. Sorry, the presentation distracted me a bit, but in the small businesses, it's all about predictable insights. Danilo, próximo. As you have on this slide in front of you, it is 5 billion loyalty accounts today in the US. and this number is expected to go up. Once again, if I divide that by the amount of users, one user have an average of 20 loyalty apps on their name. That's a lot of points being lost and not being optimized. And for the businesses, it's great because it becomes, instead of a liability in their accounts, becomes a profit if the user don't redeem this. But there's an estimated $100 billion sitting on these accounts that could be sitting with Tezos points or Tezos blockchain that can be used to stimulate the economy. On the other hand, passa Danilo. On the other hand, we serve small businesses that do not have a mature cashback program and require frequency in their work. So, like a hair shop or a restaurant. And what is the problem today? These businesses, if they don't adapt and if they don't understand the role of data in their operations, they're going to soon be destroyed by Amazon because they know everything about us. So no matter how good your business was 10 years ago, how my parents did things that way, if you do not adapt and if you do not put data as a core of your business, you're going to be out of business soon. And like, this is not me saying, this is a trend, and it's not sustainable. Like, they're competing against companies like Amazon that they know everything about us. So soon enough, Amazon and all these companies, they're going to be delivering the best pizza, even if you do the best pizza now. They have the recipe, they know everything about you. So Spoten gives for the businesses a tool for them to understand and compete against these big companies, and for the small, and for the end users, a tool for them to collect all their loyalty points in a standardized way, using Tezos as a tool.
Today we will be pitching Voting Coin. My name is Ridha.
My name is Brian.
And my name is Lauren. So Voting Coin's company purpose creates incentives for corporate shareholder engagement for both corporations and shareholders themselves.
So the problem that many corporations deal with is engaging smaller shareholders and regular shareholders in general, So basically, the problem exists with engaging them and encouraging them to vote. And because voters or shareholders don't find the incentive to vote, they don't actually engage in this, leading to a worse business decision-making process and strategy.
Cool. So the solution, we think Tezos is uniquely optimized for Voting Coin and to be able to provide a non-fungible token, which is Voting Coin, on the Tezos blockchain. So this would basically delegate a voting asset as a non-fungible token, voting rights to shareholders so that they could then participate in governance voting decisions of their corporations. So voters would receive a staking reward for each decision that's made, and this would then incentivize them to participate in the governance voting process. So we see voting as a whole, voter turnout tends to be pretty low across the board, whether this is in politics or in terms of business. So we want to be able to create these smart contracts on Tezos' blockchain that then would allow voters to be uniquely empowered and incentivized monetarily to then provide contributions to the overall voting pool. And we would delegate a certain amount of Tezos' token as Voting Coin as an asset that companies could then tap into and then be able to increase overall voting power and governance.
Okay, so the benefits to the company is by using Tezos blockchain is that they can actually verify the votes. This eliminates problems with bots and stuff when we answer surveys. And another benefit is increasing shareholder engagement. Because voters have an incentive to vote, there's like more financial benefits for them because they'll be able to create better decision-making processes, which have been like there's research backing up a more refined decision-making process and like how that influences company decision-making. But overall, it reduces costs because the current process of like engaging shareholders is very tedious with surveys and distributing that and actually trying to engage the shareholders. So overall, by utilizing Voting Coin, this would largely benefit the company in allowing them to make better decisions as a business.
And so
Yeah, go ahead. We just want to touch on some research on shareholder engagement. So the Investment Responsibility Research Center found that shareholder proposals on environment and social issues that were fully adopted have led to a 0.72 to 0.8 increase in ROA and a 1.1 to 1.2% increase in profit margins. And another study by Boston College backs up this similar research on shareholder approval and like how that correlates to better decision-making processes and how that leads to positive stock price reaction.
So the benefits for the voter is that we are monetizing voting, which is an investable asset and also makes money for each vote. And this increases company awareness for the voter, making them feel like they are part of the company themselves. And it creates a purpose for the voter and also boosts morale because the voter can have a voice and they feel valued and they feel like their voice is part of the company.
So we explained how it benefits the consumer and also the corporation and the voters, but we want to tell you why you should invest in Voting Coin.
So, as my colleagues have said previously, so there's a lot of incentives to use a voting or a blockchain-based voting system, but this also benefits Tezos blockchain as a whole because then you'd be locking voting or monetary rewards as an asset onto Tezos. That would then lock that financial incentive into the blockchain and then provide sort of that symbiosis of business with blockchain ecosystem. And it would be easy to integrate into the Tezos blockchain. We want this to be fun and easy, interactive. We imagine this would have sort of a slick UI, a really nice app, sort of make it mobile enabled, built into the blockchain. And then basically because it's decentralized information, companies would then be able to participate in voting in and around the world. You wouldn't be tethered to need an internet connection, for example, or be tethered to a certain spot. You could just access it from any smart laptop or phone or any device that you have. And then also in terms of scalability, I know that this is something that investors and companies will really be looking to. So this could scale from small company to a large company. Obviously, you'd want larger companies. You'd want like your big tech companies like Fortune 100 companies, but this could also work for small startups as well. And overall, this is just increasing voter engagement, voter turnout, and also just boosting morale for the people that are a part of it, right? I mean, you know, if you feel like you're a part of the company's success and its growth, you might want to hold and, you know, stake your investment in a company, but then also with voting, we're then incentivizing that process and putting a monetary back to it. And Tezos, we think, is a great opportunity to create that system.
Your time's up. Do you want to go directly to how do you judge the revenue model, last slides, or you are done? We're done.
Yeah, we're done.
Yeah.
Yeah.
Thank you.
Cool.
Hello everyone, and thank you for having us here. My name is Aris, this is my colleague Manan and Lavish. We're all first year students here at Babson, and today we'll be presenting digitized voting through Tezos platform at a global level.
So the current problem with voting is there's three problems. Either there's human error or fraud. It's inconvenient because sometimes people have to go to polling booths outside of their location, and thirdly, it's really costly. This is because there's two methods of voting right now. Either you can vote through EVMs, which is electronic voting machines, or voting booths, which is both. They're really inconvenient.
So say goodbye to physical voting, and we're introducing Tezos, which can be done globally, voting from your home at your convenience.
So the process is fairly simple. The voter downloads a remote voting booth in their smart device. Now there are 4.54 billion people around the world using smart devices at the moment, have access to the internet, therefore they'll be able to do this through web or mobile application. They submit their identity information then, which can be verified by the vote conducting organization to make sure that the vote is genuine and legitimate and should be considered part of the whole ballot. The voter information is then added to the voter blockchain and then cannot be tampered with by any other party, therefore it prevents any unfair advantage towards any particular result. A smart contract, which is where the Tesco integration comes, which we'll talk about later, but then that is executed and the voter is issued a ballot. That a ballot is issued to the voter. Then blockchain technology ensures that the voter does not vote multiple times, which maintains the authenticity of the whole system. Now, as for the how, after voting, the system ensures that the vote is valid and accepts it. Therefore, only genuine votes are considered in this whole circulation. The vote becomes a transaction in the blockchain ledger and is therefore encrypted, which maintains the voters' private information to the other voters. But then also but this is done after checking that the voter is genuine and should be considered part of the whole circulation. The voter can also, through the results, they can verify their vote, make sure it's counted through the application, and they can audit each ballot to make sure that their vote was actually considered on the whole results. And this maintains the whole accuracy of the project.
So the advantages. First of all, you get instantaneous results without having the wait, which is a lot quicker. It removes the possibility of human error and fraud, of course. And it's cheaper than physical voting because it's also, you don't have to actually commute to the place. And, and of course, it's also very time consuming for each individual to go at the place with a representative there to host.
So the market size is limitless for something like this. Like I said before, 4.54 billion people around the world have access to the internet. Therefore, there are a lot of different applications to this. One application could be voting for elections, which is a really relevant issue, especially this year because of the US general elections that are happening at the end of the year. So voter turnout has been decreasing for the past few elections. Even though there are 330 million US citizens, only 56% actually end up voting, which is very limited. And to increase this, to make sure that people are actually taking part in the democratic system they're involved in, this was a really relevant and helpful idea. As for the corporate side of things, 4 different limited companies around the world are using voting in order to elect leaders that can lead their organizations or corporations. There are 5.6 million firms in US as of 2016, all of which involve some sort of voting process which can help them decide different board members, to elect CEOs, and this will make sure it's done in a transparent and efficient manner. For revenue generation, as I said before, there's massive demand for this kind of thing worldwide. Political demand is showing through research where 73% people in Australia also indicated that they would like the opportunity to vote online. And what separates this from current EVM systems is that the enhanced security measures, which maintain a voter's information and political preference to the other voters and allows them to keep it private. In terms of revenue generation, a revenue model, there will be a purchase fee that is charged to the kind of organizations that use it, depending on the size of whatever they're using. Organization that's using 20 people obviously require that kind of infrastructure that can support that kind of load. And then it's different as it goes progressively higher as you're involving it at a larger scale.
So how Tezos helps us is that their use of smart contracts, which allows us to make credible transactions, and because the transactions are really irreversible and trackable. Also, the platform of formal verification comes in use because it provides an extra layer of privacy and security to your votes, your decisions.
And in terms of the blockchain tech stack, we're looking at a commercial IP system because open source, obviously, you don't want people altering the code of the whole security system that you're trying to establish. Therefore, a commercial IP system with certificate validation and communication protocols, which enable the data transmission to happen efficiently. And this will help with the mass adoption of the whole blockchain technology because voting is a very prevalent and relevant issue throughout. It happens around the world in different scales and different stages. Therefore, incorporating this kind of technology in a digitized world will help us raise awareness about blockchain technology and increase the limitless applications of it. And as for the social impact, increasing voter turnout will help improve the effectiveness of democratic systems and help people contribute more to the societies that they're part of. Thank you.
Awesome. Hello, judges, peers. We are VerifID, and we are here to provide reliable ID verification that is decentralized. Our team consists of Galip Sina Barak. Sina is concentrating in data analytics and economics here at Babson. Casey May, who is a software engineer at Olin College of Engineering. And myself, Maxwell Goldstein, I'm concentrating in technology, entrepreneurship, and design here at Babson. So the problem that we're seeing in our society at large is increasing fake ID usage, especially in our age group and even younger, which is a huge social problem because young people are drinking that shouldn't be and getting into places where they shouldn't be. 77% of people's fake IDs have worked at least once. And right now, anybody who has $100 and 10 minutes of time can pretty much buy a fake ID on the internet that can pass 90% of all verification checks. Now, there's no true standardized ID barcode format as well. All states are using something different, and this leads to a lot of voter fraud and mistrust, as well as people getting in places they shouldn't be. So we want to start by reforming the barcode and reforming a digitalized system for the barcode. So this starts with what I just said, the decentralized verification barcode, which is not an all-encompassing solution by any means. That's not to say that we're connecting every piece of data to you to this one barcode, because that would be scary. And anybody can verify this information. And we're starting with the barcode, but then we're going to allow people to read and write that barcode from public and private entities based on certain things that they're looking to verify. You need keys to encrypt and decrypt this information, which initially can solve age verification problems, but we can later expand that to way bigger issues like voter fraud and keep voting data in a chain that is private but still accessible to prove that you voted.
Right. So the areas of usage, as I've told, like a lot of people in college use their fake IDs to get into the places they shouldn't be, and they actually do scan. They put it in a thing that scans it and it says it's real. And for like clubs, liquor store, casinos, like people shouldn't be losing money before they're 21. Airports, there's like a very long process in the airports. There is like a big machine that like you put your ID into the machine, and it's like owned by the government that actually takes like scans it physically and uses to the government database to check. But this is the only super accurate thing, but it's confined to the government. They can only use it, but we want to make it decentralized and available to everyone. And it's literally, they can even rent cars and go around with this fake driver's license that's bought like 10 minutes online. And we want to do a widespread adoption because we just want to take it broader. The first idea that came to our mind is politics. We want people to be able to prove who they are before they vote and just fight for democracy. And we realized before moving to the voting problem, we have to solve the fake ID problem at the first place. So in the mass adoption, after we do the fix the driver's license and scanning all around, we want to move to politics. We want to make sure people proves who they are. We want to avoid double voting, and we want to also protect results and by double checking. We also want to use in financial services. If you're a customer, you go to a bank, you're going to take your money. You want to prove who you are. And if a financial advisor is going to prove they are the CPA, passed the bar exam, or any kind of financial institution, if you're a bank hiring someone, you want them to be able to prove who they are.
Awesome. So we covered the theme of this problem by both in our actual stack and in the building up of support and security of systems in place. So that's kind of like revolving around the theme, building up the stack. While we actually made our VerifID stack here, it's very early stage, obviously, but the important part of it is the front end, which is both covered within a mobile application and a physical barcode. So we'd both be creating the barcode technology and an app allowing users to scan a barcode. So for small businesses, they could use our technology with both scanning a barcode and then verifying that the person's old enough. And why Tezos? So Tezos is like at the integral part of our technology. It's decentralized networked maintenance, which allows us to offload a lot of processing power. Security is literally everything in verifying IDs. People want to know that they can trust what they're using, and with Tezos you have that. And then incentivizing bakers allows for security while actually getting stakeholder engagement too. Like you have people outside of the company that are putting their time into gaining resources using the name of the company, so it's perfect.
Business opportunity behind it. By 2024, the ID verification market is expected to hit 12.8 billion. And if we aim to reach 5% of it, it's going to be around like 2.5%. And I just want to point out the compound annual growth rate of 16% in the industry. And with the wide adoption of blockchain, I believe it will further increase. And how are we going to get our money? First, we will start by government funding. Then we will make the institutions who are using it pay. If you're a small record shop, you're going to pay. And then at the end, we will move towards user contribution and eliminate government funding because we want the project to be owned by everyone else. And we want to make it a community issue. And when the users will actually like it and try to benefit from it, I think this will increase stakeholder engagement and the community development behind it. Thank you.
Yeah, thank you.
The Dream Team?
All right. Good afternoon, everyone. My name is Nia. My name is Sarah.
My name's Vincent Talley.
And we are the Dream Team. And we are going to be presenting our solution on banking the unbanked. So currently, 25% of the US population is underbanked or unbanked. And just for clarification, that basically means that 25% of the US population doesn't have access to having records at a bank, having access to a bank, and having like an ID and a digital record with a bank. And some current problems that the unbanked/underbanked are facing are high transaction fees. They can't have access because of high transaction fees. They have a limited ability to pay, a lack of a digital identity, or they have lack of property registration, so they can't use their property to leverage property ownership for credit.
And to really put that 25% into perspective, we have the number here of around 33 million plus, and to really give you that perception. And also, it talks about also the underbanked in the United States, because we have these urban areas or rural areas where you don't have those banks because they're moving away or there's not a location near them. And so you have that issue occurring throughout the United States. And so our demographic reasoning behind this is that we really want to get the areas where we chose the United States dollars because it's more stable compared to other currencies and compared to other countries throughout the world. So like the Indian rupee, they have issues between the government with the amount of money there, and really the there's a lot of liability there. And so our crypto is pegged at 1-to-1 US dollar.
Yeah. So our solution to this problem would be to create a Tezos-backed blockchain banking platform, so essentially like a digital wallet for these underrepresented communities. And in addition to creating these digital wallets, we would also be able to assist with the creation of digital identities, which is all audited by a regulatory body. And this allows these underrepresented populations to create their own financial alternatives, and this solution would be more efficient with faster transactions, very transparent with the financial records, and also scalable going into the future. So Tezos offers many benefits that other blockchain technologies don't, such as on-chain governance. So the on-chain governance would allow for continuous improvements to the system through the user voting, and the participants with the proof of stake consensus mechanism all have collateral in the system, which guards against fraud or false information. This promotes the trust in the system. An additional benefit to using Tezos specifically would be the smart contracts and formal verification capabilities, which continues to add credibility and trackability to these financial transactions. By using a computer to automatically verify proofs and using these automized mathematics, this adds additional levels of security that whereas other blockchains can be susceptible to millions of dollars in losses if there's a hole or a bug in their code. So in the long term, this solution is also scalable as it can stabilize over time. With the quick transaction fees, we can hopefully achieve mass market services over time, as the base is more stabilized, and this will allow for a sustainable long-term growth. So Tezos has a more stable creation and governance model than other blockchains, and going into the future, we could also consider sharding as a form of allowing the blockchain to scale by breaking up each state of the chain into little shards or partitions and allowing parallel transactions to occur at the same time. So just going over revenue possibilities here. Total cost, it's still very early to say, but we're going to estimate, based on other companies similar to this, that it would be around 300,000 plus consulting, and we have all of the breakdowns percentage-wise here. Continue. Yeah, so in terms of our revenue model, we would charge a one-time transaction fee in addition to around 0.75 or 1% added on to each transaction. And then going into the future, we can look into adopting the token markets or investment platforms. And the bakers and endorsers in the system will be rewarded for contributing to the further security of the system. Thank you.
Hi everyone, our Tezos business pitch for today is the Tezos Insurance Company. I'm Samir.
And I'm Jed Kaufman. We're both students at Babson. So American VC companies have invested in small companies across the United States about $300 billion in 2019, but we feel like the rest of the world is missing out. Only in 2017, there's been $114 billion invested across the entire world. Interest rates for microloans or microfinancing across the entire world average about 37% interest, and some rates can go as high as 125% annually for individuals in emerging markets. Despite a desire for profit, microloan financing institutions, or MFIs, charge such high rates because of high operations costs, currency transfers, and delinquency rates. And there are currently close to 100,000 active borrowers across the world, and year-over-year growth upwards of 50%.
So the solution we have come up with provides value both socially and financially. The solution we're pitching is a smart contract-based system incorporating credit derivatives to decrease investor risk. This promotes participation in emerging market small loans. Creating a smart contract to ensure microloans will bring out the potential in emerging markets by securing transactions of microfinancing institutions, also known as MFIs. So what is a credit derivative? We understand that's a very complicated subject, so the best way we thought of simplifying it down was give an example with people. So say I'm person A and Jed is person B, and the judges can be person C. I want to loan $1,000 to Jed, but I don't want to risk not getting my investment back. So person C, which would be the judges, can step in and kind of insure the loan. I would pay the judges $10, for example, to secure the loan. If the loan goes through, the judges keep their $10. If the loan doesn't go through, the judges are responsible for paying back the loan.
Alrighty, so why blockchain? We believe operations costs are significantly decreased by the smart contract substitution for lawyers and intermediaries, including operations managers. We also believe that currency transfer costs are eliminated because of the inherent benefit of blockchain across multiple countries. And then also delinquency rates are decreased since the capital is tied up in smart contracts, and we can be able to delegate specific users of capital, just specific uses of capital, and creating self-executing payments. And then why Tezos? The proof of stake is inherently less risky, and it gives the blockchain less of a risk to be incriminated. Proof of stake requires much less energy than proof of work, which is significantly more beneficial in developing countries with limited access to resources. And then also benefits of using the Tezos blockchain over Ethereum by liquid proof of stake, which would allow institutional players to invest by customizing risk and security based on capital adequacy ratios.
Credit derivatives come with many risks, and the three biggest risks are leverage, liquidity, and speculation. Using a Tezos-based smart contract will allow us to mitigate many of these risks. Leverage lists could be contained because smart contracts can have stipulations around them that prevent the nominal value of the contracts around the insurance for the asset to be contained. On top of that, liquidity risks can be contained because the smart contracts can be initially limited by securitizing cash flows of just the business they're covering. On top of that, speculation risks can be contained by initially selling these insurance contracts to microfinancing institutions themselves. Microfinancing institution risks are fraud, high interest rates, and operational instability. The direct link between fraud and smart contracts is pretty apparent. By creating terms in smart contracts, users of the loan on the other end of the microfinancing institution will not allowed to use the money for fraudulent purchases or just pick up and run away with the funds they've been given. On top of that, interest rates will be lower because risk will be reduced by allowing banks to give more loans. Risk will be reduced because they do have these insurance contracts on top of the loans, and then operational instability will be mitigated because the immutable ledger on the smart contract will keep track of every action that happens. So the model above shows how our company would make money. Investors would give money to the microfinancing institution, and the microfinancing institution would give money to emerging market small businesses. The microfinancing institution and Tezos Insurance Company will engage with the smart contract to list out terms for the emerging market small businesses. The payments will also be done through the smart contract, and they'll be automatically executed. If the emerging market small business is able to pay back their loans, Tezos Insurance Company keeps its profit. If not, then Tezos Insurance Company, through the smart contract as well, is liable for paying back the microfinancing institution.
So social wellness and building a stack. Giving access to capital at a lower cost will be a more secure manner for individuals in emerging markets. We will be allowed to spread the American dream across the world, and potential for individuals to increase and diversify their wealth in emerging markets and across the world will become apparent as well. Bringing institutional investors into play will increase the amount of capital and liquidity available to small businesses and investors in emerging markets. Thank you for your time.
Does that mean you're just going to go to infinity?
No, I don't know. Perhaps.
The revenue might be.
There you go.
Oh.
There you go. Come on,
Good comeback. Good comeback.
So hello everyone, I'm Carol.
My name is Marco. The implementation of Tezos blockchain platform in high-frequency trading.
So, in the past decades, companies have used computer data and machines to deal transactions, majority of transactions. And then the high frequency and speed transactions came out. The rise means that the ordinary investors will be taken place by machines or just artificial intelligence or just website, which has greater efficiency to save the money and the time for people. For example, now trading companies and stock companies are trying to save many seconds to for each transaction just to earn the spread money for each one. So generally speaking, speed is integral now.
So to talk about high-frequency trading, I want to talk about 4 main points. So the first one is that high-frequency trading is regarding algorithmic trading, algorithm trading platforms. Number 2, it is buying and selling at ultra-high speeds. The speed could go down to about 10 milliseconds per trade. So that means making the trade and then having the acknowledgement come back within 10 milliseconds. And to put that into context, humans blink at around 300 to 400 milliseconds. And so that is at really, really high speeds. To look at the significance of high-frequency trading, 60% of U.S. equity volume is made up of high-frequency trading. Therefore, it has a very high volatility in the market in the United States. Each trade has low returns. Maybe some of the returns come down to even less than a cent, but they have very high volumes and very high frequency, which makes their overall income really, really high. In terms of the problem, we have a few main points. First, trading by ourselves, we have some human errors going on. Sometimes we have emotions that are integrated into our trading. And one of the examples is during 2013 when there was news that the White House was bombed and that President Obama was injured. And the algorithm picked that up and thought that there was a situation. And they immediately started trading, and that it was all fake news. But on that day when the Dow closed, they were down 143 points. In terms of insecurity, the reason is because there are a lot of trades that are insecure, and so we need to combat that basically problem. Also, building high-frequency trading companies, there's a lot of costs going on in there. That includes not only the position with which your company is in, basically the location and what the distance between the stock exchange and your firm is, as well as any fiber optics cables that connect you to the stock exchange, and as well as network latency. As you may know already, that high frequency trading requires very, very fast speeds. So network latency causes a lot of millions of revenue to be lost. And finally, differentiation. There are a lot of high-frequency investment companies already, and they can't differentiate themselves. So how do we differentiate them, right?
So our company is a company that would deeply develop blockchain technology that will help individuals and companies to increase their trading speed and efficiency to save their time and money. So generally, now we have three directions here: bulk transaction, international transaction, and storage expansion.
So the purpose of batch transaction is basically to buy stocks in bulk. And through blockchain, we're able to do that in a very, very efficient and secure manner.
And for the second one, that is our main point. Like for the first one, accurate credit recording and secure info tracking. Tezos is really good at info security and stability because they have relatively democratic governance. And for the second one, Tezos smart contract simplifies the transaction transits. And this simplification means that all multi-step transactions can now be only one-step transaction, which really saves people's time in the future. And the third one, high-speed information transferring. So companies spend billions of dollars just build networks and lines to make the transferring speed faster. And for the fourth one, flexible currency. So also based on the smart contract, this makes quick currency conversion more flexible, and because there's no transits, so which makes also a lower cost. So for the third direction we plan to integrate the segregated witness by Peter, the founder of Blockstream. So in his idea, this kind of, okay.
Thank you. Closing statement.
Hi everyone, my name is Lucy.
And I'm Tiani.
I'm Claude.
So here we are presenting CoronaSure.
So CoronaSure is a blockchain application that focuses on the coronavirus that's recently going on, and we're an insurance company that's targeting coronavirus. So with the virus going on in Japan, China, and Korea, the insurance companies in those Asian countries are starting to targeting the insurance companies so they can utilize blockchain data to modify and validate smart contracts. This is the wrong slide.
Okay. So uncertainty is something that is a problem that all insurance companies face, and we believe blockchain can be a solution to that. Now, there are two types of uncertainties. The first one is we call adverse selection. So when patients they buy insurance and conceal their illness, so they can get advantage on that. Now, what we can do is we can use the Tezos technology to gain accurate and timely data of the suspected cases in a certain area to assess the exact possibility of a virus outbreak in a certain area, and the insurance company can change their premium accordingly. And the second is, we say, false claim of compensation. So there can be uninfected cases and pretend their illness to scam the compensation. And how would we deal with that is we allow those insurance companies to access the data stored in the blockchain, which is very accurate, and to validate the claimant's illness and to deal with the compensation. So in short, the risk and premium will move in tandem.
So about Tezos' role in here, the major role is governance role as a smart contract issuer, and Tezos integrates blockchain technological framework to businesses, and the decentralization system provides incentives to increase ledger accuracy and quantities, and also generates contracts to maintain the overall order of the blockchain community.
Now, this is a very scalable business in a very short period of time, and also there's already a blockchain started in mainland China to do the same thing of reporting the illness. So it can also have many further implications. So first, one can launch a website or even a mobile app to inform the general public about how wide and fast the virus is spreading. And also, since the data is very accurate, now the chain can be essentially the database for some academic studies like biomedical like modeling. And also, since the virus is spreading very fast and it even extends beyond the country borders. Now it's happening in Japan and Korea and several in the US. So it will be very highly suggested, recommended, and beneficial to extend the chain as well as to help the business that's operating multinationally to change their premium as well. And also, at last, the insurers can be the bookkeepers. Like combining these two roles into one can simplify the process and increase efficiency. That's it. Thank you.
It's a smart way to basically issue certificates. What it essentially is, it's a blockchain-based online certification issuance service that allows you to issue, manage, and view certificates just by logging on our website. Why do we need to use Tezos blockchain for that? Because Tezos is very secure. It uses proof of stake and it has institutional grade smart contracts. So I'm gonna show a use case on how we're gonna go to the mass market. There's a big problem in this world that a lot of people nowadays, they order fake degrees and they try to get into jobs and they try to get into like even universities. Some people don't have a high school diploma, they try to get into universities. Here are some examples. In the US, they say 500,000 of Americans hold fake degrees. It could be your doctor, which is pretty dangerous. And there was a problem in Pakistan, which is my country. There were 24 pilots who drive planes, and they had fake degrees. So, but there's a problem. It needs to be solved. The problem is that it takes a lot of time and effort and money to verify someone's degree. Usually, the way it's done today is, if, for example, I apply to you guys for a job. You guys are gonna find a agency. You're gonna pay them, I think $15 average, and they're gonna further call the university, and then they're gonna verify that he actually graduated from here, which is pretty complicated and not smooth. So we present Tezify, which is a solution. It will store everyone's certificates on blockchain, which is impossible to forge or duplicate. It will lower the cost and the time needed than the existing process. And for example, I want to change jobs and I want to go to another company. They wouldn't have to verify my degree again, which they have to with the current process. The benefits are like you save a lot of time and money, improved employment rate for if you're the university and you use our product, you have an improved employment rate, reduced labor cost, and you also have a backup of student records on the blockchain. How it works for the university is you're a university, you're simply going to go on our website, you're going to make an account, you're going to have a list of whatever people are graduating that year. You're going to upload the list online, and our website is going to generate a certificate for each person, and it will automatically send an email to the person, and he can share that email with anyone he wants to, and they can go on our website. And so basically what you do is you write the name of the student and other details, you issue a certificate, it's saved on the blockchain, and a unique URL is generated and sent to the student. How do you verify it? The student can further share their URL with his employer, and he simply goes on the website, puts it in, and the certificate is there, and you can see who issued it. It's not like some random person can issue it as well. So we couldn't find the data for the world, but this is the market size for the US, for the universities. There are 5,300 universities in the US, and 3.9 million students graduate each year. We'll make money by charging these universities based on their size. Like if it's a small university, for example, we'll charge them around $250 depending what's the their batch size with graduates. That's how we're gonna make money. This is how we're gonna make their life better, basically. And that's it. Thank you.
So I'm Larry. And
I'm Vishnu.
And I'm Darnell. Okay, so we from UMass Boston. So today we're going to present about, we just named the company so called Tech Asset. Yeah. So we propose it because of the current limitation of the asset that people want to invest. So for example, people want to invest in a stock, they need a broker, but so they need a broker and they're gonna charge a lot of money. But now we have a cryptocurrency and we want to integrate this into the blockchain that run on Tezos. And the stock exchange have a limitation to 5 days a week and have a downtime 2 days, and based on the country too. And they charge a lot of money. And the small size cannot or mid-size company cannot participate in a stock exchange. It only the big company can start it. So they have a difficulty to raise fund if you want the small size, middle size want to raise the money. And our building blocks, so these we want to create a platform based on the mobile app that run on Android, iOS, or web application, and later we integrate the Mac OS and the Windows program that they can run on the OS.
And for the functions of our project, our goal is to have any company can list their own platform for a small fee, and any investor that wants to invest, any investor can invest in the listed companies that we have in our application. And with this investment, they invest in our token to entrust us and to invest in the listed companies that we have. So why we choose Tezos? We choose Tezos because there's code verification security, let's say with tools that Tezos has with its formal verification that we can use with it, and the use of proof of stake that it implements. And also we use reverting the baking with the requirements so we can have committed investors. If I recall correctly, it's 8,000 Tezos that we can use to have a committed baking. So we want to use that. And with Tezos, we can have a 40 to 50 transactions per second that we can implement it. So it has a fast speed. And we can use the use of Michelson, if I'm pronouncing it right. Michelson provides better correctness and proofs and avoids bugs that we can avoid in the future of our application.
So the primary advantages of our project. The first point actually relates to one of our revenue sources. So whenever a company lists their brand or their investment pitch to a platform, they have to provide a small piece of their revenue so that we could actually go and check their revenue processes, their forms that they have entrusted with the government, or at least be a little more transparent to the users. The second one was our returns are in Tezos or our platform token. So what we plan to do is make our own platform token. So the investors that come to the platform, it's much easier because each and every company that enlists in our platform will have their own token, because their tokens would increase based on their revenue as well as the demand of sale. But to avoid the confusion, we created our own token so that investors possibly could invest in our token and we could invest on other tokens of the companies on behalf of them, and then provide them the dividends or the profit based on our tokens. The platform token holders also have investment incentives for discounts depending on the amount of they hold. So imagine if a big investor holds 1 million tokens, they might have more incentives and more discounts while transferring the token or while investing it to Tezos or different coins or different company tokens. Then our token is 1-to-1 USD. We are planning for 1-to-1 USD so that they don't have to look for the price changes or variations when they get the dividend. And we are also offering both cold and warm wallet. And the last point that I would like to offer is that we plan to do a Binance-like approach where they actually provide insurance for these wallets, so that if anything would happen, we could cover them. If any hacking could happen, we could cover them through that insurance. And this is basically our slides. Thank you.
What we've done here today is monumental, and I want to thank everyone for coming. This is the first ever Tezos Boston Pitch Competition, and a lot of you learned new stuff today, which is exactly the point of this. You're exposed to the new ideas of an emerging blockchain technology, Tezos. And it's okay if you run into parts of your projects and solutions like scalability that are still being developed, because we won't know what to develop unless you guys start building and give us feedback. So it's all part of the feedback cycle. So I just want to thank you again. You guys are the reason why this is successful. All the participants, look at this, about 40 of you here, so widely exceeded our expectations, and the variety of projects were just fantastic. So we're going to take some time. We're going to go up there. We're going to calculate the scores. We're going to come down. We're going to crown some winners. There's some tacos in here. Tacos is the unofficial mascot of Tezos, so enjoy, guys. Give us a few minutes and enjoy.